Welcome, everyone, to this session where we'll be discussing financial services within the platform ecosystem, especially aimed at platform workers. I think what I'd like to do before we get started is give you a sense of how this session will go and then offer a few introductory and framing points. So my name is Gayatri Murthy. I'm a financial sector specialist at CGAP, where we focus on financial inclusion aimed at low-income communities. We're a think tank housed in the World Bank. So before we get started on financial services and what innovations are noteworthy, I think what I want to do is situate us in the context of this space and tell you a little bit about who we're talking about. So when we think of the word platform workers, this is a space where platforms are a space where there's a lot of rapid change happening. And while we are speaking about, a platform worker today, who or how that person looks like is also a pretty diverse spectrum. So today, who we're going to speak about is people who largely derive a livelihood working on platforms. They appear on a very large spectrum of skills. So you could imagine if you live in a big city in the world today, that this is someone who's delivering food to you, to your home, someone who might be coming into your home to provide personal and home services, or a very small seller on an e-commerce website selling you goods and services. So not some of those large MSCs that we've been talking about at Financial Inclusion Week, but largely very small sellers and small and workers. There's a lot about this segment, including their skills, their gender, and the amount of capital they bring that really change their outcomes and the financial inclusion opportunity here. But what really binds us today for this conversation is the nature of innovations happening in this space, which can be applicable to this segment on platforms, but possibly have implications on anyone deriving an income from digital work in general. So that's the kind of binding factor for us here. So let me start by kind of sharing a few initial thoughts. We'll then go into a panel where I'm joined by some very esteemed guests who I'll introduce shortly. And there will be time for audience questions as well towards the end, but please keep your questions coming in throughout the session, and myself and someone from Financial Inclusion Week is also monitoring them. So keep them coming and I'll be sure to get to them towards the end. So why focus on platforms and digital work? I mean, to say in short, the opportunities here are twofold, right? In the financial inclusion sector, largely, we have had real issues serving low-income, informal populations, especially informal workers, right? And the reason for that has largely been because we don't understand, or we lack the data to understand the risk and the kind of credit worthiness or even inclusion worthiness of this segment, largely because of their informal work and the thin files we have on them. Second, even if we have the willingness and the data to understand this segment, it's a segment that's been very expensive to serve because of the lack of digital channels or delivery mechanisms to serve them. So platform work and the digitization of work in general offers an opportunity to solve both these challenges. One, by creating data trails that are richer than purely, payment transactions that really help us understand the nature of someone's livelihood, the source and amounts of their income, and things like that. And then the digital channels through which they're actually doing their work represents an opportunity for embedded finance, which we've been hearing a lot about throughout this week, even in the MSC space. And that's kind of exactly what we're talking about here as well. At CGAP, we did some initial research on this segment, as well as the kind of willingness or appetite to serve them today. And there's a few things I think I would like to highlight on before we get into the innovations. So in general, there's a fair amount of speculation of how big this space really is. And what we've begun to understand is that in several emerging markets, whether that's India, Mexico, Brazil, Indonesia, lesser so in big African markets, but even there is a rapidly rising proportion of platform workers. And if you expand this into kind of digital workers, people who sell on Instagram, and who go kind of social media, informal social commerce ways, this space is even bigger. However, estimating numbers is hard because of platforms not being very transparent about these numbers sometimes, but estimates show that anywhere from 2 to 5% in Africa and 10 to 12% of workers in the labor force in some of the most advanced emerging markets are platform workers in some form or the other. And this is a very interesting group, especially when we look at the lower income group within this, which is that you're talking about a segment that's digitally savvy, right? That has to use a smartphone, oftentimes in English in kind of most markets, except for where Spanish is dominant, to kind of do their work. And in that sense, they are digitally savvy, but not quite financially included. So they may have bank accounts, but largely ignored by formal finance when it comes to other products. So they're moving into an ecosystem where there is tremendous opportunity and some risks, but without the right skills, without the right resources and services to actually utilize them. And there are several barriers on the supply side as well, ranging from financial services providers who still consider this segment risky. The workers themselves, while needing finance, may still lack the kind of trust and true and digital literacy to adopt some of these services. The platforms themselves, while interested perhaps to serve, may not always be able to do so, whether it's because of the knowledge they possess on financial services in-house, or sometimes even the regulatory permissions needed to do so. In many emerging markets that we're looking at this phenomenon in, digital rails are still largely incomplete. And payments, while payment rails may exist, the ability to automatically withdraw money or offer a suite of services might still be limited. And so the regulatory and policy kind of environment is also a bit of a barrier today. We'll hear more of this from our panel as well. So innovations exist, and they exist both through kind of fintechs who are offering these services through partnerships, but also platforms themselves who are creating kind of in-house financial institutions to serve workers as well as small merchants. And challenges exist on both sides. Sometimes data partnerships are not fully kind of in place when it comes to the partnerships. In other cases, legacy regulations, whether platforms are allowed to serve these customers financial services, whether an insurance product can be overlaid into people's livelihoods, often act as inhibitors. So let me then conclude by sharing a few ideas on what innovations are happening out there, and then we'll move to the panel on kind of nuancing and layering this a lot more. In the area of credit for platform workers, largely what we're beginning to see is wage advances. So this is an area where kind of you can observe what a platform worker is earning and essentially give them an advance of their income either a week before, and then in the very next pay cycle when they're paid, take the payment from them with a small interest rate. Now, one might imagine that these kinds of loans are very potentially risky and could add to a fair amount of consumer protection risk. What we're realizing is there's a fair amount of appetite for loans like this, especially for covering kind of working capital costs, whether it's fuel costs, whether it's repairs, things like that, and that they're actually more useful or more valuable than imagined. going anywhere further beyond a wage advance to something like a car loan or motorbike loan or even an education loan for someone in the family is harder today, mostly because the data is untapped and there's a fair amount of unwillingness kind of from the loan underwriters to serve this segment with anything larger than, let's say, half their income or something in a particular pay period. So the experiments that we're seeing right now are an attempt to expand that credit amount. So creating kind of platform-based credit scores that mirror or improve on credit bureau scores and can slowly, through kind of a ladder of loans or loan cycles, expand what customers can be eligible for. So this would then rely on automatic repayments when earnings are earned into an account based on how much a person earns and tying the credit amount to it. But a lot of challenges remain here on how exactly you can time credit repayments, how people start earning once they owe a loan, etc. Savings, while kind of less popular than credit, is also an interesting area of innovation because the earnings that people have can act as kind of triggers. When the earnings are observed, they can act as triggers for automatic sweeps and payment prompts and allow for a much more frictionless journey of saving. So the biggest challenges we face in savings is that kind of low-income communities don't often find it easy to put those savings in and kind of see them grow. But the platform space offers us kind of this opportunity to not only sweep, but also when embedded in the platform universe to be allowed to observe your incomes grow. And how can we kind of incentivize this? So early experiments show that yes, tying savings to earnings is kind of a good idea and that people can be prompted, but there's a lot of incentives and marketing and information that needs to be provided alongside that it's not automatic, that people see a savings product on their platform's app and then just suddenly starts saving. The embeddedness is important. The ability to see your money grow is also important. When it comes to insurance, I think this is a space that's least developed between credit, savings, and insurance. In a sense, we are really not seeing the kind of customized insurance that works for this segment. And in fact, legacy insurance products being tried out in this space are not really having a big effect. What seems to be having some effect is if there are like strong partnerships with the kind of employer or the platform and a customized kind of combination of bite-sized insurances. So a small health insurance product, a small vehicle insurance product tied together and often offered at a very low cost or free to allow customers to try insurance out. So when there is not a lot of appetite to or value for insurance, how can customers be allowed to, or workers be allowed to try this out for free? What we're realizing is that in this space, customer experience becomes really important. However, regulations and how insurance is regulated is quite at a legacy stage right now. So these regulations and the need to kind of not be able to not provide insurance for free and things like that really hinder customer acquisition today. I think the key messages I want to leave you with before we start the panel is that DFS innovations on platforms, especially for workers and small sellers, is fairly nascent. And it's because key aspects of data and partnership are not quite figured out yet. Yet current innovations have a fair amount of creativity and customization that's worth noting. And these lessons, if successful, or potentially even if they fail, can extend to other segments experiencing digitization of their work and business. With that, let me turn to my panel today and introduce them first to you and go over for questions. Joining me today are three people in this space who are actively involved in providing financial services to platform workers and gig workers in some form or the other. So first, Niladri Roy, who is the COO of Little App. Little App is a prominent platform based out of Africa in several markets, and provides ride-hailing services, food delivery, groceries, and several other kind of services in one app. Today, we're going to be largely focusing on the drivers within Little App. Niladri Roy, so Roy, as I'm going to call him for the rest of the panel, brings actually 2 decades of experience in digitizing financial services, digitizing large kind of software operations, and is actively involved in a partnership we are going to be talking about in providing saving services to drivers. So welcome, Roy, and I look forward to our conversation.
Thank you.
Next is Saurabh Sharma. Saurabh Sharma is the Director of Emerging Customers at Britam. Britam is a large financial services company that many of you may know, largely known for their insurance, one of the most prominent players in Africa. But actually, Britam also provides a host of other services, including savings, asset management. Saurabh is just the right person for this conversation because he's focused on emerging customers, which is largely the customer base everyone gathered here would be interested in. And Saurabh actually brings quite a deep experience in this segment and financial services for them, as well as kind of linking these financial services into the world of work. So Saurabh, welcome, and looking forward to your comments. And finally, joining me also is Marissa Dean. Marissa Dean is a senior consultant at Caribou Digital. As many of you may know, Caribou Digital is a independent consulting firm prominent in the financial inclusion space. Marissa heads all their strategic projects on international financial inclusion, digital economy, and in her work actually has been really prominent in the platform space and the opportunities of platform-based financial services. Caribou has done a lot of work in this area, and Marissa has been behind most of it. So I'm hoping for Marissa to be a partner on this to me and really bring lessons from the global space she's observed. So welcome, Marissa. Let me start off with first question to all of you, which is really about thinking, what's that opportunity that you see? What's that match between what this kind of segment needs and what we might be able to offer for each of you? So starting with Roy, as someone who runs the platform, just tell me a little bit about how you see that match between what Little can embed and what your drivers actually need.
So everyone, thank you so much for this opportunity. Gayatri, thanks for bringing me in. My name is Roy, as Gayatri already introduced. I look after the business and operations in Africa for Little. We are actually building a very nice and interesting technology where we are connecting multiple partners. So either it's drivers, it could be a rider, and of course our customers, who are the end customers, are using our services. So the basic need is, of course, there's a lack of awareness about this gig economy or the gig workers, because we came from a segment where we have seen the conventional working environment. 10 years before, I mean, there was no such digital platform. Over the last 10 years, we have seen multiple digital companies are coming and actually playing the role. Little is one of the first and foremost player to bring out those digital technologies and trying to bring an umbrella of services to provide to our end customers. We have seen a huge gap in terms of awareness, in terms of access to finance, particularly for this segment we are serving. Access to finance has always been challenged, and that's why we have seen the microfinance segment and the credit societies, the small lending societies, are actually mushrooming in this country. Lending has always been, governed by the banking sectors, but I think over a period of last 10 years, we have seen the growth of telecom dominating this place, a telco-led lending, inclusion we have seen over a period of time. But I believe with this digital inclusion and with this gig workers are actually working on these platforms, the access to finance is becoming much more easier because they are not been banked before, and then data accessibility is not there. So I think the players like us, we are actually bringing this and filling the gap.
Yeah, exactly. So Saurabh, I think building off on that, my question to you would be, as Director of Emerging Customers, clearly this is a role that exists because it's hard to serve this segment with the traditional or existing financial products. So I guess my question to you is, how do you as a financial institution see the opportunity, and particularly the business opportunity, the viability opportunity when partnering with big platforms and creating products together in partnership with them? What unlocks for you that makes this customer segment viable?
Thanks, Gayatri, and thanks everyone for joining this session. I think from a financial service provider perspective, the most important bit is access. I think as you rightly pointed out, Gayatri, in the beginning, that we are talking about platform workers who have traditionally been in a very unorganized informal sector. They have been very difficult to access. I think the cost of acquisition or cost of access has been very high. But when you look at platforms like Little here, they're actually aggregating these workers. So aside from Little, we have worked with platforms that are trying to aggregate construction workers, for example, or domestic workers. So that can provide the kind of access that has not been there before. And it gives us a large base with the potential to lower acquisition costs as well. For example, if you just talk about Little app, they have more than 100,000 active drivers in Kenya. So that gives you an estimate of the kind of base we are talking about. So that access is very important. And I think other features that I think you touched in your introductions then realize this access. So let's talk about data availability. Like data availability helps financial service providers to design products which are tailored to these workers. We can get access to this summary data from Little on what is the driver's earnings on a daily basis. To just give an example, then we can use that to design a product. The second very important bit that platforms provide is the technology which smoothes operations, right? So they are able to provide us, enable something small collections like daily savings, something bite-sized savings can be actually enabled through these platforms. So those are the reasons. One is the base, obviously, that access to this large base of customers, but then technology, data, which now enables us to realize that access is what makes it an exciting business opportunity.
Yeah, great. Marissa, I think my question to you is slightly different and would be, yes, what is the opportunity as you see it? And it's largely, I think, what Roy and Saurabh had mentioned, but curious what your global perspective tells you, whether there are limits to this opportunity as well. I think a lot of what we hear in this space is the kind of untapped opportunity, but not enough about maybe what the limits are today too. So tell us your nuanced perspective from everything you've seen across the world.
Yeah, absolutely. So first I'll talk about what we're seeing in terms of opportunity, and then I'll talk about the constraints. So just looking at the flows of innovation capital, and a report I saw by FD Partners looking at innovation capital in Africa and where the VC funds are going, you see far more capital going into payments innovation and lending innovation than you do into insurance. And so we see far more embedded and data-enabled product innovation on the side of credit. And specifically on credit, I think what we're seeing more of is targeting, so targeted credit. So like the folks on the call are already saying, being able to use some of that transactional data to be able to, pre-authorize credit offers and making those available to drivers or to workers on platform or to merchants. What we're seeing less of, and I think where the bounds of innovation lie, is that actual cash flow based underwriting and translating that into more targeted and tailored offerings. And so we'd like to see more push in that direction, and it's not necessarily there yet at scale. On the insurance side, I think where we'd like to see more innovation happen is on the bundled product side, and exactly what Britam and Saurabh and these examples are talking about, blending savings opportunities with insurance to try to see how those can help meet the needs of platform livelihoods. Now, a very interesting question, if we can get the customer value proposition right, what's going to limit these opportunities? And now what you're really talking about is the infrastructure side and the policy side, because when we stay embedded, it's not necessarily like magic happens in the background. There is a whole bunch of process that needs to have innovation around it to make data flow smoothly between systems for KYC to happen efficiently and effectively and across all the different users that we're talking about, particularly excluded segments. And if that infrastructure layer isn't working effectively and particularly cost effectively, then we're going to see people drop out, we're going to see people excluded, and the customer acquisition cost is actually going to be pretty high. And on the other side, policy as well. So policy needs to make it clear where liability lies when there's personal data being exchanged, so that parties know exactly what they are responsible for and how to adequately maintain that data for customer protection purposes. And then in addition to that, and something we need to watch as we go into global recession, is just the cost of capital, because that will definitely affect the perception of risk and the ability for people to provide these offerings at interest rates that are that people will take. So that's a little bit of my perspective on it.
Yeah, absolutely. And I think I want to bounce off, take your perspective globally and actually bring it back to Roy and Saurabh on a real partnership that they're actually involved in right now. So I think I have the permission to say this, but Roy and Saurabh, you're both working on a live partnership today where you're taking a product from Britam, a money market fund, so something that allows workers to save in a sort of fixed manner. And then Roy, we're taking this product to market through the little app to your drivers. And so I think through this partnership of yours that's beginning and in the market today for a few weeks, I'm just curious to hear from both of you so that our audience actually gets the granular view. How have you thought about the tweaks and design of these products? Maybe first Saurabh on the Britam side, to make it suitable for Little's customers, and then maybe Roy on how you take it to market, take a product coming from a financial institution and kind of make it relevant for your drivers who are used to hearing from you, but don't know now Britam. So just curious, maybe Saurabh first and then to Roy.
Sure, Gayatri. I think, as Marisa said, clearly savings and insurance, or investments and insurance, have really been, lagging behind credit. And not to offend any credit providers here, but I do feel that over indebtedness in emerging customers is a very real problem, as we know. So we are very passionate about making sure that insurance and savings also emerge as important financial services within that spectrum. And I think from Britam's perspective, for platforms, and even before that, the most important recipe, I would say, is trying to make these products more simple by making them bite-sized. I'll take example from Kenya. So Kenya, locally, we call it a kidogo economy. So kidogo is a Swahili word that means small or tiny. And you look at the same example across different sectors. So, for example, if you look at the telecom sector, somewhere between 2003 and 2004, telecom sector came up with these very bite-sized packets like daily bundles for voice or data. Same is replicated in FMCG space as well, where you can buy shampoos, like for a very small amount, and it's really demonstrates how the local economy works, right? Like people's cash flows are constrained. So they're really not ready to consume annual products or even at times monthly products. So the most success that we have had in our insurance and saving products are when we have been able to make them bite-sized. So that means that you enable now a daily consumption. So we have insurance products that go as low as daily, monthly kind of premium products, similar with savings as well. So the product that we have launched with Little Cap is called Imarika, which, as you said, is a savings product. It's a goal saving products where customers can save as little as 20 cents in a day. So we lock these savings for 9 months because the idea is to make it a goal-based saving. And at the same time, now to Marisa's point, we have bundled a life insurance of around approximately $500 to that product as well. So the idea is really to make it bite-sized, and I think that is the most important tweak, as you put it, Gayatri, for making this product successful. And obviously now I'll let Roy speak to like how their technology is actually operationalizing such a bite-sized product. Yeah.
Thanks,
over to you, Roy.
Thank you. So yes, of course, our partnership is valuable for more than now 5 years. The Britam and us, and before we actually have this product, we have already been kind of securing any trip which is actually happening on Little Ride. So the trip is already secured by Britam Insurance. So it's already been there before. So now with this particular product, Imarika, when we actually trying to bring it into the market, keeping in mind this low income segment, the gig workers, they're not been insured. They're not been having any source of their savings funds in any sort of banking institutions in this country. So we have a pool of drivers and riders on our platform we have been dealing with every single day, but they're purely focusing on just on borrowing culture. So we are trying to bring a culture where they actually now start putting the money into a savings account which can earn them interest as well as securing them for the tenure of time actually they're putting the money in. So it's kind of trying to build a culture, savings culture based economy, as sort of rightly says Kidogo economy. So it's a small, tiny, but when they talk about the volume is very, very large. So in the technology side of it, it's pretty simple. The drivers are already been onboarded. We have done our KYC process, which is rigorous. Any driver who's actually onboarded on the platform, we have to go through a rigorous process. And then the driver opened an account with us. And obviously, every transaction they do on the platform, we are the one who's going to settle the amount we owe to them, minus the commission we earn on the platform per transaction. So we realize that the drivers simply getting paid, but they're not able to put the money into a savings account because simply this money is being utilized for various ends meet, but they are not securing their life because most of the drivers we have seen in the platform, majority of them, they are not having their own vehicle. So they're renting it out from their partners, and they're paying monthly a sort of premium or a sort of installment to use the service, and and whatever the money they're earning, it's getting actually kind of just to trying to actually make their livelihood. But can we have a culture where they save the money and set a target to get their own vehicle and be their own, on their own, and they can be the owner of their own vehicle and actually start earning more money? And or maybe they have other obligations to actually make sure they can buy a land, or they can actually pay the school fees for their children, or the other obligations they wanted to do. There's some aspirational value which they can fulfill using this small savings culture, bits and pieces. So we're trying to build this culture onto the platform. We have, we kind of created that wallet where whenever they wanted to actually kind of top up, they can top up the money we actually owe to them. They can actually segregate that money for that savings, and it can be kind of rolled over. It can be just accrue the the interest, and also at the same point of time they can get it insured. I mean, their life can be insured during the time they're into the product. So I think we are trying to make it very, very easy for them, because we created the UI and UX segment for the customer onboarding onto the platform of Imarica. We have an integrations with Imarica platform of Britain, and we made it very, very simple process. Within few seconds, actually, they are onboarded with the platform and they start saving. So the customer journey, customer experience is relatively very, very simple. We keep it that way so that the cultural shift, that now we need to actually start saving, would be much more easier for them.
Yeah, absolutely. And as someone who's been allowed to observe your partnership closely, I think just want to summarize a lot of what you both have been saying about the acquisition becoming very simple, because Roy, what you're saying, you've already onboarded them from a financial KYC already, so that part gets easier. On the other side, I think Britain brings such a wealth of understanding of that product and kind of how it's structured kind of in any case, but then how to then customize it to this customer base. Some of the things, Saurabh, you mentioned in terms of tweaks and bite size. And so since that if it's already an existing partnership of trust, which is what Roy, you referred to, of already trying out a ride-based insurance, like a basic ride-by-ride insurance for several years, and then moving to this more targeted customer offering, allows for you to build on that trust. But I'd be remiss if we also didn't talk a little bit about some of the challenges, not so much in you not being the best of friends, but in terms of the real challenges that exist in the ecosystem being nascent, being new, the regulations not being ready. So just curious, because like I said earlier, platform-based financial services are going out in two ways, right? Some of these really giant platforms that exist in Latin America and Southeast Asia are largely they're getting their licenses and offering services on their own, but a equally kind of way of doing this is what we're seeing between you two, where a financial institution and a platform are in partnership. So I want to understand some of the kind of, maybe things that are not so easy to do today, given the level of infrastructure, API connections, regulations, trust of the kind of platform worker to now, get familiar with another institution through their apps. What are some of these kind of limitations today to making your partnership not being the full vision? And Marissa, I'll come to you for a global perspective on this just after as well. But Saurabh, Roy, first to you, just kind of seeing some of the real world issues of the partnerships and what could be better.
Right. Maybe I can go first. And I'll talk about what was easy. What was easy was, I think, the meeting of minds. So we decided, I think on the first meeting that, okay, we want to do this. So I think that bit was the easier part. And then to your point of challenge, I think the bit where we spent most time was really addressing the regulatory issues. I think that was the most complex puzzle to solve. As you can imagine, it's an insurance cum investment product. Both those products are very heavily regulated. So the point was, how do we address those regulations? For example, all investment products are very heavy on anti-money laundering laws, for example. So that means that KYC needed to be enhanced. KRA, which is the income tax PIN, was not being collected by little for the existing drivers, but we had to bring in that because you could not do without that. So I think that obviously brought changes to now some additional KYC had to be collected because of those anti-money laundering pieces. The another bit that, Gayatri, I think you touched around is how to use platforms as a distribution channel. Because obviously there are again regulations around who you can partner with for distribution. So the idea we had was that Little is actually an online platform. So our product was already allowed to be distributed in an online way. But still there are ways, for example, it can only be Britam's call center agents that can contact these drivers. Because Britam is actually is using the online platform, but what you call as advisory part of it can only be done by a financially regulated institution, which is Britam in this case. So those bits, I think, just finding a way around those regulatory pieces was, I would say, the more bit of a challenging part. Yeah.
And Roy?
Thanks, Saurabh. So I believe Saurabh has addressed mostly the regulatory side of it, as he has to deal with as an insurance company. On the technology side of it, I have, which I deal with mostly the drivers and the communities. And we have seen the basic challenge is changing the mindset. Mindset is a big thing to change, because the mindset has been there over a period of time, is that it's like I can only transact using a telco mobile wallet, and that is already kind of universal because it is connected everywhere, and I can actually do whatever I can do. Either I can do a P2P transfer, or I can do a merchant transactions, I can actually pay my government fees and stuff like that. But they actually forget that in the whole transactions, they are not doing any sort of savings culture or any sort of accrual of their earnings on the interest and stuff like that, which they can actually secure their life, or they can secure their future. Because I'm talking about here the low income group, and bank are not interested for the low income group, because the cost to credit or the cost to savings is so high, for the low income group. That's why the unbanked population is so high in Africa. So this is where we are coming in. We are coming in just to change the mindset that, hey, now with this platform, through the embedded finance, you can start securing your life through our partner. And we can provide you a savings product. In the savings product, you can start doing as small as 2 cents or 3 cents per day savings, and that will be accrued over a period of time, and you can actually earn an interest, and you can secure your life. And yes, change mindset could be that why should I actually lock in my money for a time, because they have never done it before. So I think basically the challenges which we have seen here is how to personalize this, how to penetrate it down to that level where they can understand it in their own language, in their own terms. And that's why we need them, the influencers in their community. We need to actually talk to them. We need to engage them in a better manner so that they can actually kind of, circle the informations amongst their communities and stuff like. So that is, I think, up till now, it's a bigger challenge for us.
Yeah, absolutely. I think this is a very valid point that even though they are in your digital ecosystem, it's not an automatic transition to financial services and deep use of financial services. Marissa, you kind of have looked at financial services in the platform ecosystem in a variety of ways. Definitely partnerships, also platforms going it alone. Kind of what challenges have you seen when the rubber hits the road, when these financial services actually get designed and put out there? Like, how much of an issue is the partnership? Kind of how much of an issue is, you already touched a little bit on the regulatory stuff, but just curious what you've learned about good ways of partnering and delivering these services globally.
Right. Yeah, thank you. And I think what Saurabh was saying earlier kind of hits the nail on the head. Between these two parties, there was a willingness to work together, and they were doing this in an environment, an ecosystem where it was feasible for them to take this on and execute, notwithstanding the bumps in the road. And I think what we've heard, when we're talking to platform owners and trying to create partnerships, is one of the biggest challenges was finding a willing partner that saw eye to eye on how they wanted to deliver the product. And if we take a step back, ultimately there's an impact case for doing financial services, but in many cases, there also has to be a business case for doing it. And what we're seeing when we scan is that, financial services are being integrated by platforms to generate additional revenues, to potentially drive core business, and to also increase retention. And particularly for platform workers, the retention aspect becomes huge and really, really important. But if you don't have a fintech or financial services partner that sees long-term customer value as a really important priority, that's going to be misaligned with retention. And so in some markets, we are seeing the emergence of really strong partners that, base offerings for platform workers around extending the lifetime value of the customer. So things like, in addition to the livelihood products, also offering mortgages or other products for people's lives that will help extend the runway there. That's going to help increase, like I said, the lifetime value of that customer and see eye to eye with a platform that wants to create retention for its workers. And then to your follow-up question, what else are we seeing that's challenging and where do we see bumps in the road? In certain markets, eKYC is huge and it needs to be available. It needs to be readily accessible, not just by financial institutions, but also by platforms and fintechs. That's one of the major bumps in the road. Also, we talked about policy, so the legality, making sure everything's clear, but also the stability and the availability of some of that non-traditional data. So making sure if we want to use, for example, mobile top-up records, that this is accessible by people that want to make use of this data so that people can take it into account in addition to what they're seeing on platform data. So just a few ideas there.
Yeah, absolutely. And I actually want to piggyback an audience question for you, Marissa, I think, at least to start off with your response on it. So I think so Diana Diso had a question on, are these like loans that are being given to platform workers, are they in any way cheaper for the customer, for the worker, than these kind of more predatory payday loans that exist outside? I think early evidence shows that maybe they are, but I'm just curious, just to expand that question out a bit, are we seeing emergence of kind of early value of these products, viability for the financial institutions, but also kind of becoming better, cheaper for the worker themselves? Have you seen any evidence that shows these products to be more inclusive, more viable today, or is it still very early days? What are you seeing?
I still think it's very early days, and one of the reasons why is just to see where even global large platforms are in their sustainability and their revenue generation, or their net revenue rather. And so many platforms are still making a loss. So I think the sustainability question and the jury's still out on, what does success look like? But to answer your other question about what's the pricing of these products look like, we did a really rough, finger to the wind kind of available data scan in Kenya to see, what does the pricing look like for loans being offered, through platforms, and how does that compare with bank loans and other, payday lenders, micro lenders that are out there in Kenya being one of the markets where there's a lot of micro lending available. And it was somewhere in the middle. So it was definitely a better deal than going to a mobile micro lender, but still not quite as good as a bank. But you have to also realize that for many folks, going to the bank isn't an option. So this is a much better option than trying to float your business through a micro lender. But what we'd like to see is that risk come down a little bit more. And that will probably happen, to your earlier question, with stronger partnerships where the partner sees real value in de-risking, with the data that's being available, so that we can get those products to be viewed as similar maybe to some of those bank loans that are more available for more established businesses.
Yeah, absolutely. And maybe to Saurabh as well, a question, because you as a financial institution, I'm sure at some point in your role, you have to also prove the viability of these products, that in fact, going through these partnerships and new models to target the emerging customer ends up creating business value. So are you seeing any early indicators of that, whether it's reducing cost of acquisitions to Roy's point, or anything else that gives you more momentum for doing more of this, more of emerging customer type products? What are you seeing?
Definitely, I think I would say, like, just through our different embedded products, since 2019, we have onboarded almost 400,000 customers. So this includes embedded products on telcos, ride-hailing, or some of the other platforms that I was talking about. So that clearly tells you that in terms of reaching customers, it's a very viable way. And I would say our cost of acquisition for these 400,000 customers is less than $1. I think we were looking at it for somewhere like around $0.50 per customer. I think where the challenging bit is still getting to higher value. I think what we are seeing is the value in terms of number of customers. So volumes is pretty good, but I think the value of transactions is still low. So that does present a bit of a challenge in terms of what other investments you can make, like how many marketing dollars you can spend to now increase that value of transaction. So I think that is the critical bit in terms of, so early trends, like I said, in terms of the number of customers or volume of customers, it's been proven to be very helpful for us. However, the value of transactions still needs to be enhanced. And that's where now the next bit comes in, like, do we use, some of the behavioral tools, like what kind of nudges or reminders we could use to now remind these customers to save on a daily basis. So that piece, I think, is the business case. I would say it still needs to be proven a bit more.
I want to encourage all the audience members listening to, please ask questions as we're heading towards the last 10 minutes of the session. Let me know if there are questions, and we're happy to take some of them on. I have, in the meantime, I have, two kind of questions for the for the panel. So let me ask one of them at least before, as the questions are coming in. So I think if you had to talk about, you've spoken about regulatory challenges, you've spoken about kind of product market fit, you've spoken about a variety of issues today. So I think for each of you, starting with Roy, I was just curious if there are large unknowns for you as you go into this area. Like, are there things that you feel like, I don't know enough about this to know whether this this whole ecosystem, this whole financial services delivery will work at all? If there are things that you don't know, what are they today for you that you think need to be figured out in the next, few years for sure, as we scale financial services in the ecosystem? So start with Roy, and then Saurabh, Ben, Marissa, and I'll be tracking questions.
Sure. Good question, Gayatri. So, if you look at Eastern Africa perspective from, particularly in Kenya, I can talk about Kenya. The culture is pretty much a kind of borrowing culture. We borrow all the times, at least the micro lending in the spectrum, people borrow all the times. And that's how the data comes in, that, the big telecom organizations and some of, a bunch of micro lending companies who are actually mushrooming every single day, they try to actually tap in. And that's why I believe over a period of time, you're also increasing the number of defaulters. But when we are trying to create a shift that from a borrowing culture to a savings, a micro savings culture, I think that is where the gap comes in, because we have seen that, I can give you a typical example that by the time 15th of a month comes in, people are already out of pocket, they're broke. They need to start borrowing, and to meet the ends goal, whether it is school fees or buying groceries or traveling to their home countries, the up countries and stuff like that. It's a pretty much borrow culture, and this culture still remain because the number of lenders coming in every day, and they're trying to actually kind of promote the borrowing culture more and more. And also on the other side of it, because the lack of the lack of access to the mainstream financial houses, it also creates that this workers. If you look at this segment, it's a large segment of population. What they're going to do, with this borrowing, kind of a mode, because if they wanted to kind of invest in, you don't have the data, that whether I should actually invest, whether I should actually give them money or not. From a large perspective, I'm talking about small borrowing and stuff like that, becoming defaulter, again coming back, and again and you're borrowing it. It keeps on going. But the thing is, the moment you start actually shifting them to a more like savings culture, that is where I believe the challenges remain, or the challenges comes, people say, why should I save? Because I can easy to borrow, it's very easy in Kenya that I can borrow. So I believe that is where the challenge comes in. And we are trying to still figuring out that, how this product uptake could be over a period of time. We're trying to push all the tools, and also understand the data much more better when we start rolling out this product in a full spectrum. So I think for me, that whole shift is a learning curve for us.
Yeah, absolutely. Saurabh, and then I'll come to Marissa.
Right. So I think the biggest unknown, I would say, is how do we create and communicate the value to platform workers? Kenya is, as we know, has among the lowest saving rates, even in the region, even in East Africa. I think we are lower compared to the other neighboring countries. And the question is, as Roy said, like, lack of that saving is driving people towards credit, right? So the question is, how do we communicate the value? And linking it to your previous question, Gayatri, that how do we even make it a business case, right? So for example, we have been trying different communication approaches and see what is most effective, both in terms of driving uptake while as well as being cost effective. So we have used something like buying social media ads. So you can buy ads on Facebook or Instagram. That will give you tremendous outreach in terms of impressions. Like, I think whenever we have done that, our impressions have been like almost close to 500,000, but the conversion rate is much, much lower. When you link it to now just digital communication such as push notification or SMS, I think then push notification, I mean a notification within the app, let's say little app, the conversion rates are a bit better. But finally, the most effective is still the hybrid way. So a bit of digital, bit of physical touch, which could be in form of a call center, is where we are seeing the most improved uptake rates. So that shows us that I think there is still some kind of inhibition within platform workers on an entirely end-to-end digital journey. They would still like a bit of human physical touch. So that is the unknown that we need to define, which will help us to even realize the business case as well. Yeah.
That's a really good point and adds to a lot of the nuance we are seeing in this space through partnerships like yours. Marissa, how do you see this? What are the biggest unknowns for you from your observations that we as a sector need to start knowing to get going?
If I had 3 wishes to kind of solve for the unknowns, I think the first would be just better knowledge and data on platform livelihoods. The data is just really, really flawed on what we can use to understand how many people are participating and what the size of the pie might be. So, greater investment into quality, robust data that can help us appreciate what the size of the segments might be so that we can use that information to unlock financing and funding from large partners who might want to help accelerate this space. The second thing being also many of the studies that I'm seeing also have challenges in the way that they're scoped. So what we know about platform livelihoods is that people are participating part-time, that they participate in multiple platforms. So the concept of multi-homing, and these digital strategies are just one of many strategies that they employ to be able to help meet their needs. And what we need to see in data that is looking at this segment is just an appreciation of how workers are using digital platforms so that the way that the questions are asked can help inform what we do as strategies. And that goes without saying also that we need to see more gender-framed studies so that we know how women are both using platforms, digital platforms in their livelihoods, and also what their financial services needs are and how those might potentially be different from men. And then finally as well, one thing that we really don't know is for people that are accessing platforms and financial services, on platforms or through platforms. Is this the first time that they've been able to access financial services? You know, are platforms helping them to open an account for the first time? Are they helping them to get credit for the first time? So just really understanding the role that platforms are playing more concretely from an impact perspective would be huge.
Absolutely. So we're almost at time, and I think I'll just offer a conclusive point at this point, and unless there are any burning questions that come up at the last minute. But I think this conversation shows us that you know, the nascency of the space presents to us some kind of room for a bit of a pause on our kind of big enthusiasm from the platform space, but also some opportunity. And I want to end at that mixed note. I think the positives we're seeing is that some of the creativity and customizations being applied in this space are worth noting, not only for this segment of platform workers, but in fact, for any other segments like small MSCs as well. And I know all three of you work with different kind of bases of people too, workers as like drivers, but also small MSCs, Roy, on your platform, and, you know, Saurabh as well. Your emerging customers includes a larger base. So I think lessons that are being tried out here, especially now to design and deliver these products on digital rails, are going to be applicable in other environments that I think are worth taking note of. At the same time, I think there are real challenges relating to technological integrations, regulation, payment rails, eKYC norms that actually affect the viability of these services, not just in the platform ecosystem, but any kind of digital ecosystem in the markets we're interested in. So on that note, I would you know, encourage all of us to remain interested in this space, because informal workers are the kind of one of the final frontiers of financial inclusion that we haven't been able to figure out. And this medium might offer us a way to at least start thinking about viable solutions. I want to thank Roy, Saurabh, and Marissa for their expertise, for the nuance of their arguments and points, and really for shedding light on something that a lot of us know and experience in our daily lives, but don't have a granular sense of. So thank you for bringing that through your work and through your comments. Thank you, all of you, for being such great panelists. And thank you for everyone joining online. And I hope the conversation continues, and we're always available to answer more questions if they come up later. Thank you.
Thank you.